Hey everybody, it's Christopher K. Smith. This is my FibLines quarterly update for September 23rd of 2018. A quick overview of the video. This will last just under 15 minutes, and we're going to give you a very quick introduction to the FibLines indicator. And this is really important. We're going to talk about what's changed, what's new in this indicator. This is probably the most significant change in the FibLines indicator since I first released it back in 2016. So please stay tuned for that. We're going to go and review some symbols, and especially how we can reinterpret those symbols in light of the change I'm going to talk about here. Then I'm going to briefly talk about the kind of trading I do, how I use the FibLines indicator, and I'll show you my actual account and results so far in 2018. So definitely stay tuned for that. So what is FibLines? FibLines is a way to uncover hidden areas of support and resistance in a chart. So you look at the chart here of Lululemon. It's a yoga pants maker. Without the FibLines indicator, there's really no rhyme or reason really to where prices are going to go, where they're going to stop. So let's go ahead and add FibLines. And once you do that, you'll notice that, wow, all of a sudden the levels seem to kind of jump out where it's going to stop and where it's going to pause. You can see right here this red line, it paused at the red line, shot right back up again, hesitated at the orange line, gapped to the bottom of the orange line, paused at the red line. And most recently, you can see some price action here. We had a gap up after earnings. It was a positive surprise on earnings. Prices came right up to this yellow line and kind of darted back and forth a little bit, and are now sort of consolidating between the orange and the yellow line. So this is an example of the kind of insight you get with FibLines you don't get with other indicators. Another example is Amazon. If you watched my last quarterly update, that was back in June of 2018, right about here. And at the time, I said we had a target of Amazon for $1,997 a share. And sure enough, I went up to that line, exceeded it, and came back. And then we had another rally up, which got deflected really almost perfectly. Three-bar deflection to the downside off of this red line right here. So sometimes these lines are targets, sometimes, which means they're sort of support. Sometimes the resistance, they hit the lines, you deflect off of them. So that's what the FibLines looks like, and it allows you to identify hidden areas of support and resistance that you could not with other indicators. And as a result of that, I had a long position on Amazon for most part of the year, but I was confident that prices were going to get up to 1997. So that's the kind of things you can do with FibLines you can't do with other indicators. So that's FibLines. I'm not going to give you a detailed explanation of how they work and how they're derived. If you're interested in that, you can go up to YouTube and search for Intro to FibLines. You'll find my videos created back here in early 2016 where I'll take you through how they're constructed, how they work, why they work, and all those types of details. So next up, I'm going to talk about what's new in this release of FibLines. This is kind of a spreadsheet here where I kind of have all the master levels in FibLines. And the original indicator, as it's been for the last 2 years, the red lines were at 100, 0 to 100 move, 161, 261, and 423. And if you recognize these levels are follow the Fibonacci sequence, which means that each number is the sum of the prior two levels here. So the sum of 100 and 161, of course, is 261 up to 423. And in the past, the red line stopped at 423, and that's as far as it went. After that, I had to kind of reinterpret the chart to come up with new levels based on that. What I realized is that the way the market's been moving and with the kind of indicators we have, there's really no reason why I have to stop at 423. So I calculated the next two levels after that, which are 685 and 1108. So 685, of course, the sum of 261 and 423. And 1108 would be the sum of 423 and 685. So this makes it a lot easier for me because, prior to this, I took a look at stocks like ADP. And I struggled with, I had to reinterpret them so many times because prices kept exceeding the 423 level. But now, for example, you can see that the 0 line for ADP is right here at 64. The 100 was right here at 80. Then you have the 161, the 261, and the 423. And in the past, I'd have to go back and recalculate that. But now we can see the 685. And the 1108 all the way up there. So what this means is that the sequence now can handle moves up to 1100% of the original 0 to 100 move. In the past, there were only up to 400%. So that's huge. It's great for me because I don't have to struggle to reinterpret the values as often as I used to. And it also allows me to stick with some earlier interpretations of charts that I had, for example, the Nasdaq 100, the QQQ. If you go back to a long-term chart, let's go for a weekly. We can see that the my zero line there was back in the low of 2008, and so this is the 100, the 161, the 261, and the 423. And in the past, I'd have to stop at 423 and find a new 0 to 100. Well, now you can see if we can extend this to the upside, and you can see the levels still continue to hold even as prices go higher. So the next target on the QQQ would be the, I think it's the 685 line here at 195.64. So that's a significant change, and you'll find that the levels change much less often. It's much better for me because I don't have to struggle to reinterpret them. So that's the big update. And this spreadsheet that I use kind of internally for my own purposes, you can see you have the red lines, you have the orange lines, and then the first level gray lines, and there are 6 of those, and then you have the level 4 lines, and there are 18 of those as prices go higher. So you can see the level 4 lines and all the way up to 1108 is now the end of the sequence. So the sequence does continue higher from there, but there's only so much you can do in Thinkorswim in terms of lines and memory and things like that. All right, so that's a significant update. I talked about Lululemon briefly in the beginning, and what my take on this was that as the stock gapped up after earnings, it came up and found resistance at that line. If you look at a shorter term chart here, you can see that prices got deflected back down here, and then rallied right back up to this line on an earnings upgrade, on an upgrade that happened. It was an analyst upgrade happened. And I knew right at the time that that was going to be a high, that was going to be resistance, as it was the orange line, and almost to the tick, it deflected right off of that line. And it's just amazing the way it works sometimes. Then after that, you'll notice prices came right back down and filled this gap right here, almost to the tick again. And now I expect prices are going to get back up this old high and exceed this high in a second. In the future, so I'll show you the trade I did when we look at the TastyWorks platform. Okay, so that's one important update. Next important update is I updated the indicator to update the symbols for the Nasdaq 100. So a lot of Nasdaq 100. Actually, before we do that, let's go back and look at some of the major indexes through the perspective now that we have the 685 and the 1108. Let's take a look at some of the futures we have here. Let's go to say a 20-year weekly. And let's go to /ES, which is, of course, the E-mini Nasdaq 100. You can see here that the prices are at the 161, 261. We're about to come up here to the 423, which would cause me to reinterpret the indicator, but now we have a new the next significant level would be 4361 in the ES, and of course way up above sometime in the future the 66640 level in ES. So you have ES. You have EMD, mid-cap 400, also right here at the 423 level. And then, of course, the Nasdaq, sorry, the YM, the Dow futures, also recently rallied right out here, exceeded the 423 line, and now are just recently made a new all-time high. And, of course, the Nasdaq, the NQ, has been on fire, really leading all the major markets here. Also right here at the 423. With plenty of room to go to the upside. So that's that. Other updates I did, I updated the Nasdaq 100 stocks. So let's take a look at some of those. Let's pull up my FibLines symbols. And it's great looking at some of these symbols here from the perspective of the new levels. You have Align Technologies, ALGN's a recent addition. This is the company that makes Invisalign, which I am an Invisalign customer. And you can see how well it's done here, and that you got the 161, your 261, your 423. You can see that these levels really work well in handling some of these big moves that really just could not be handled with the other ones. So a whole number of, I believe it was 15 or different updates to the Nasdaq 100 are in here now. Let's see if we can find a good one. Mercado Libre, MELI, was added support for that one. You can see how well these prices had the levels are respected here. What else? Workday, another Nasdaq 100 edition. A little sloppier, a little more sideways. X-Ray, can see this one really kind of reversed and went to the downside. So yeah, a number of simple updates in there. And next up, let's talk about my trading so far in 2018. So what I do mostly is, of course, I have a portfolio of stocks and long-term investments where I keep most of my money. But I've been working on developing an options trading strategy for a long time now, and I didn't really find success until really in the last 2 years when I started using the TastyWorks platform. And what I do mostly is trade weekly options. And you can see that I'm up about $1,800 for the year on a $10,000 account. It's about 18.6% for the year so far. And the kind of trades that I do, I'll just show you like the last 14 days, for example. Let's look at activity, and let's go to Apple. What I do is I sell weekly options on Wednesday or Thursday and try to close them out by Friday. So you get a lot of premium decay that happens in the last 2 days of weekly options, 2-3 days. So Apple had their event last week. I believe it was last Wednesday, a week ago Wednesday, where they announced their new devices. I took that opportunity to sell an iron condor, the 2217 put spread and the 227 230 call spread for $1.06 on Wednesday and bought it back on Friday for 20 cents. Next up, this past week on Thursday, I sold another iron condor for 85 cents credit and bought it back the day later for 40 cents credit. So this example of successful trades. Obviously, they don't all work out. But Tesla, another example of one that I've kind of had some success on and some failures. Here on the 13th, I sold an iron condor again for $1.95 credit and bought it back a day later for 40 cents credit. So I could talk about this method for a while, but just in brief, I only do iron condors, limited risk trades. So for example, I took an $1.95 credit here, and it's a $5 wide spread, so that means the most I could lose is $3.05. I never, I should say never, but hardly ever let them go to a full loss. And I also hardly ever let them go completely to expire in the money if they do. In other words, if prices close between the short strikes, I don't even have to close it out. I get to keep the credit for no closing transaction. But usually I'll try to take off the trade with when it's 50% profitable. And the guys from TastyWorks have a very similar method, although they look to put trades on between 45 and 30 days to expiration and then take them off at 50% profit. What I found with weekly options is, first of all, you get trading opportunities every week, and you get to trade much more often, and you get a lot of premium decay between Thursday and Friday. And also it allows you to do a large number of occurrences. I saw this video that referencing casinos, and the reason why casinos are successful is they have an edge on every bet they do, and there's a limit to how much you can bet, so they encourage you to take lots of small bets, and that's how they make their money, because they know over that large number of occurrences the odds are going to play out in your favor. So that's exactly how I feel about weekly options and options in general. As long as you sell out of the money options and you do it enough times and you control your losses, eventually the odds will work out in your favor and you'll make money. And I've done pretty well so far this year in 2018. Now, granted, I have a pretty good profit in Amazon. About 5% of my 18% is Amazon that I bought back here in the 1400 area. Now it's at 1900. But Lululemon I talked about. I'm bullish on Lululemon now. This prices came back down to that 155 level. Remember, they filled the gap right there at 155. So I sold the October 155, 150 put credit spread for, I believe it was $1.95. So I'm risking again $3.05. And if all goes well, I'll take that profit, take that trade off when it's closer to expiration with about a $100 profit, and I'm already about halfway there right now. So most of the trades again are very short term, but Lulu is an example of a longer term one. And if TastyWorks lets you, they have a follow feature where if you subscribe to this additional feature, you can see that the trades they make. And sometimes I follow these guys and see what they do. For example, again, I only trade iron condors. Everything is controlled risk. And in this case, you can see that this guy sold an iron condor, and you can follow those trades if you're interested. So that's what I've been doing. I've been pretty successful at it so far, and I'm just trying to see how much time I have left in this video. So anyway, I do like the TastyWorks platform, and one of the reasons why it works so well is it's incredibly easy to use. You can put positions on and adjust them very quickly. Commissions are very reasonable, $1 per contract to open and no commissions to close. So sometimes I put trades on and they don't really go that well. Amazon's a good example this past week. Actually, let's take a look at Amazon, say in the past 30 days. Okay, so that's Tesla, excuse me. I don't know how I got Tesla in there. That's strange. All right, let's take a look at Tesla. Hey, it's open. So took a 45% credit there. Took a $1 profit there. Took a loss right here. And this one, as I think I mentioned, I closed out for a nice profit. Let's take a look at Amazon. Okay. Amazon, what did I do here? I put this trade on, didn't have to close it out, went full profit. Put this trade on, closed it out at a full profit. Put this trade on for a $1.80 credit, and it went badly against me. Had to close it out for $3.25. So you do have to be on top of things, and you can't just sit idly by, because if you do nothing, you could have a full loss in a position, which of course will eat into your profits longer term. So I do avoid losses as much as possible with this. And this past week I sold Amazon Iron Condor for $2.02 credit, and ended up closing out a day later for a $1.80 debit. So I only made about 22 cents on that one. But for no closing commissions, it lets you get out of trades at scratch without having to pay the commission every time, and that's a huge benefit over the long term. So that's it. So I'm doing well with TastyWorks platform. Right now I'm only using a very small percentage of my capital, but longer term I intend to scale this up and make a pretty decent income off of that. So that's where I am. So in terms of FibLines, you can get them up on the FibTools Sell Store at fibtools.sells.com. You can get a number of other things up there for free. The range bands indicator, you might be familiar with, the universal trend following indicator. And range bands trend dashboard, I have a whole separate video on that, which looks like this, which you can get for free. It has multiple pieces of information in here, including squeezes over multiple time frames. Look at a video for that. And if you're interested in the FibLines indicator, you can get that up here in the FibTools Sales Store. The indicator includes the full indicator, which is support for about 220 symbols, and 4 quarterly updates in each calendar year. This is my September update, because it obviously has to be maintained as symbols come and go. And you can get that for $99, and that includes your Nasdaq 100, major futures, the Dow 30, and gold, currencies, and pretty much all your major markets, select sector spiders. All your symbols are in there, or at least 220 of them, along with the symbols file that you can use to import and create a watch list in Thinkorswim. So you can get that at the FibTools Sell Store for $99. And that's it. So thanks very much for watching. Good luck in your trading. I hope you're doing well, and have a great day.